Welcome to the Level of Interest market briefing on Monday, May 4th, 2026. My name is Oliver Sparring. I am head of trading at TradeNeon and I warmly welcome you to our weekly market analysis. As always, we will take a look together at how we analyzed the S&P 500 today, which key levels we defined and what we can expect throughout the day and in the coming week. Last week was relatively quiet, if we can ever still talk about quiet markets in times like these. On Thursday, the S&P 500 managed to break out of its consolidation to the upside and make a new all-time high. The United Arab Emirates has indeed left OPEC. However, they are still maintaining their currently high production quotas. The oil price was not particularly impressed by this and remains at an extremely high level. Donald Trump is once again lashing out, wants to impose exorbitant tariffs on Europeans, especially the Germans, is withdrawing 5,000 soldiers from Germany, and the US is preparing for a military operation to free the blocked ships in the Strait of Hormuz. Which of these things will actually happen is anyone's guess. I think by now that much is clear to all of us. Let's take a look at the news. Today we first of all have a day off and there are no major news events scheduled. Starting tomorrow, however, things pick up again. At 9:45 we have S&P Global Services PMI data. Then at 10, new home sales, job openings, ISM non-manufacturing prices and PMI data. On Wednesday we have the ADP non-farm employment changes as well as the usual crude oil inventories. On Thursday at 8:30, initial job claims will be released. Then on Friday at 8:30 we have average hourly earnings data, non-farm payrolls and the unemployment rate. These are by no means unimportant data points, but compared with last week, from a news perspective, it is still a rather quiet week. In today's overnight session, the market gapped slightly higher and is starting in a bear zone. This zone has already been tested twice at 7,273 points and could not be broken. So our upper Vanna zone edge has once again done its job and held well. The price is currently moving in a tight channel between this dealer hedging level, which is additionally backed by the prior day's VWAP close, and down here at 7,258 points, the settlement price and a dark pool level. The daily expected move at 44 points is below the calculated Black-Scholes move, so we can expect a less volatile to slightly bullish day. However, based on Vanna, the option dealers are creating resistance in both SPX and SPY. We will say a few more words about that in a moment. The weekly expected move at 99 points is also significantly below the value of recent weeks. So we can expect a quiet to slightly bullish week, at least based on this data. From a broader perspective, the market is clearly in an uptrend. The all-time high was confirmed last week and even extended. So if we do see a small correction, we can use various levels to look for potential long setups. The lower edge of the bull zone at 7,241 points would definitely be predestined for this. It is additionally backed by the prior day's low, a dark pool level and a volume profile level. The market should initially find a lot of support here, but please remember that our market analysis and level of interest in general merely show you where institutional interest is located and where, accordingly, we are well advised to take a closer look. We would never simply place a limit buy order at this level and hope for the best. When the market reaches the level, we look into the order book and validate our prepared trade idea through a backtested and statistically proven setup before we click buy. Another interesting location for a potential long entry would be down here at 7,211, a triple supported level through the expected move, order book liquidity, and a volume profile level. If the market turns directly higher, the game would be, of course, a little simpler. We like to use prior day, prior week, and prior month VWAPs alongside the prior day settlement price as references. If the market is trading above them, we are in a bullish market environment dominated by buyers. So if the market breaks our upper bear zone edge during the day, I would wait for breakouts through our levels and then use pullbacks into them as potential entry locations for long trades. But keep in mind that we are in a volatile trading environment dominated by short-term news. At the moment, I would still not bet on capturing huge moves, but rather think from level to level. Take profits early so that you do not expose yourself for too long to this partly arbitrary market environment. We should see some resistance up here at the prior day's high because the level is also triple confirmed by the prior day's high, order book liquidity, and expected move. A wonderful level to realize profits. A look at Volland shows us that the dealer hedging data is still very unclear at the moment and gives us little insight into the next few hours. This is already visible when looking at the 0DTE gamma picture. We have a lot of positive and negative exposure both below and above the current price. The only major pivot point is 7,250 in the SPX, a larger positive gamma level. This is also confirmed in the Vanna picture. So we still have to wait for the opening of the cash session in order to make a clearer statement about how option dealers are positioned over the course of the next few days. I wish you all a successful trading week. As always, we will hear from each other again next Monday if you like. If you enjoyed our analysis, feel free to leave us a like and subscribe to our channel. If you are interested in the highest quality dealer hedging data on the market, we clearly recommend the team at Voland. With the code in the description, you will receive a 10% discount on your subscription for 6 months. As usual, you can test level of interest free of charge for 7 days. You can find more information on our homepage at TradeNeon.com. Thank you very much for listening and see you all next time.